Hello traders, you are welcome to my channel once again. Sunday here. If you are new to my channel, please do subscribe. All right, that will help me a lot to be releasing new videos. Uh, I will take that as an encouragement. Okay, you encourage somebody that is giving out something for free. All right, and don't forget, if you are getting value from it, don't forget to share, don't forget to like, and also drop a comment. All right. You can also recommend my videos to other people. All right. Maybe your people that are in your platform that are interested in trading and all that, a friend, a family, just like that. Okay. Today I'm going to be dissecting a very crucial topic. I'm going to try as much as possible to break it down, or rather to simplify it, so that after this video you'll be able to trade this topic, you'll be able to apply this knowledge that I titled How to Trade Other Block Like a Pro. You know, other blocks, and what are other blocks? Other blocks are a zone, a particular point or a level in the market where financial institution, where they place their uh, their position, where they take position. As soon as they take position there, nothing can break that position. The only thing that will happen as soon as they take position, you will see a very swift move. All right, swift move in the sense that there will be a volume. All right, let me quickly show you guys one thing about order block. How you can even, first of all, how you can identify that point where financial bodies, where they take position. Once they are in the market, you will see it because there will be volume. All right. Now, this very point here, you see, this is an example of another block. You see, it is an example of other block. Now, let me cycle it so that you will understand this point. This is where, like here, and another thing you will note is that before another block, all right, before financial body, before they take position, they always do one thing. All right, that is a secret I want to release to you guys. Okay, price action might be trading bearish, then they will wait for that price action. All right, they will wait. Okay, they will wait. It's been bearish like this, down. It created a low. All right, then they will now wait for it to push up, create a resistance, then come down, create a support that will not violate uh, uh, this low. All right, that will not violate this previous low. That is a previous support. All right, they have already created a resistance here. This resistance is different from this resistance that is coming with the structure, but they will create another one here that will serve as a liquidity. All right, that will serve as a liquidity because this one is what is lower time frame structure. Now, once they push it a little up, then bring it down a little, it will not now violate the last low. All right. Then what will now happen? They push up a little, retrace. Then what you now see is a push, a swift push that will create a gap. This push now will now be a very big candle with a volume that will now leave space. All right. That will now leave a gap. And now what does price does normally? Price move from balance, creating balance, create a base, come back to balance up. Then push again, creating balance, create a base, come back again to balance up. That is just a cycle. All right, that is a cycle. So now price has created an imbalance here. At the end of the day, at the end of the cycle, price will still come back to close up this gap. You see, when price got here, what happened? This other block triggered, it dished out a buy. All right. You can call this place uh, a demand zone. It dished out a demand. That is a buy. But he only reacted a little, then he failed. You see, he now failed. He came down. All right. So what am I trying to explain here in essence is that another block, all right, it's just a place where financial body takes position. Then once they lock in their order, you see it will create a gap. That is a footprint that they will leave behind this place. They will leave a footprint, all right, to create the imbalance because of the amount they put in. Because that amount will create a very push, a very strong momentum that one candle will just push and it will be very long. It then creates what we call imbalance in the market. Now, for you to really identify another block that is very, very powerful and reliable, you have to go to the higher time frame. I am not saying that those who trade other blocks in lower time frame that it does not work, but most times it does not hold. It can only dish out a buy a little, then it will fail. Some will hold and it will dish out a buy, full TP. But I tell you, if you want to be successful with other block strategy, all right, that we trade, you just scale, you just move to what? Your higher time frame. And if you are the type that trade on lower time frame, go to higher time frame, mark the other block from the higher time frame. Then you can now scale down to your lower time frame for your entry. Now, let me give you an example. This is 4 hour, all right? This is here 4H. Now, if you look at this point here, this is a bullish order block. This bullish order block on a daily time frame, the block is all this point. All right, you see, the block is all this point. That is a higher time frame. That is a daily. But in 4 hours, I can refine this thing to be only this small candle. This small candle here is the order block, is the bullish order block. All right, you can refine it like this. All right, like this. This is the 4 hour bullish order block. But here is the downside. The downside is that price may come back all right, to want to fill this place, what you will now see, for example, price, as price has gone up like this now, price may come back in future, for example, come down. Do you know what will happen? It will get to this point, this very point, then it will start going back up. You know why? Because it respects more the higher time frame than the lower time frame. And now on the lower time frame, you now say, oh, price is reacting on the imbalance instead of coming to tap into the other block. But if you look at the other block from the higher time frame, let's say for example, from the higher time frame, let's go to um, let's go to uh, the daily now. You can see, you can see from the daily, where is it? This is the other block. Look at it. This is the other block. This full candle here. Let me remove this so that you can see. Let me remove this. You see this one? This was where we mark from the 4 hour. Now the daily, this is the other block. This is the real candle from the top to the down. Look at it. All right, you can see from the top you mark, drag it down, then shade it like this. This is the other block from daily. That is the higher time frame. Why is this place another block? Because there's an imbalance here. You see these fat candles? All right, see this fat 1, 2, 3. Then the next candle is here. So you now see, for example, let me mark this place here and here. You see the imbalance here? This is the imbalance. This is the gap that price has left behind. You understand? Now what happened? Price came back. It tapped in a little, but it did not close the gap. He only tapped in a little, but it did not close the gap. Now, what happened? On the higher time frame, you see price coming back, it retraced, it pushed to the upside, it created a lower high, then it broke structure, Here, there's what we call change of character. Price now change character from here. It changed character from here. All right. How do we know that price has changed character? That is market shift. All right. If you say market change of character, market shift is the same thing. Now, how did we know that from the higher time from daily that there is a market shift? All right. We know that there is a market shift on the higher time frame, that is the daily, because this one here was the last low. All right, this was the last low. Beg your pardon. This was the last low. All right, it created this was the last low. Then price moved up, came down. We now created what we call a market shift. All right, market shift happened here because this was the last support level. All right, price has taken out, he has violated the last support level. Now he has given us a market shift, then push a little, created a what? Break of structure. Then after this break of structure, yes, he pushed to the upside to create another high. Before he can create another high, another lower high, a market shift will also take place because it will break this internal resistance here. Guys, there is one thing I want you guys to understand. Anytime that there is a market shift, that resistance or that support level that price normally used to create a market shift he always serve as what? A liquidity for price to push up when he wants to create a market shift before he can push up to create a lower high. If you reverse it, if it's pushing to the downside, if it's a bearish trend, it will create a form of a low that is not that will not take out the previous low. Then price will now push up a little. All right, price will now push up a little. Then when it's coming down, it's going to clear that place as what? As a liquidity. Use that one to facilitate the movement to now create a lower low before you now start pushing to the upside to now give you a market shift. Then after the market shift, price will now pull back, then break a structure. Then the trend has switched from a bearish trend to a bullish trend. Now, this very one that we have in front of us, this all along it has been a bullish trend. Now, price pull back, it created a market shift, therefore giving us another low. This is the current low now. Then he now push to the upside. This look at this bullish candle. He pushed to the upside. Did he take out this high? No. Then the price, after pushing to the upside, he now moved, turned again, came down, created another low. Therefore, taking out this previous support level, this previous market shift, he has broken it. Now, we now say, okay, now that he has pushed to the downside, giving us a break of structure, now we now say, okay, trend, a bearish trend has been established. So what will now be our anticipation now? Our anticipation now is that price should pull back. All right, remember when price is pushing back, is going to use this level, this very level, as a liquidity. This very level where break of structure first happen, where the market shift and break of structure happen, is going to use this place as a liquidity. A liquidity, let's mark it. I hope you guys are following. Trading is not an easy something. It's a little complicated, but if you know it, you know it. That's all. And if you're getting confused, you can watch the video again, watch it again, watch again and again. So he's going to use this play as a liquidity. This is where the dollar sign is sitting, because most people must have entered from here. Those impatient traders, they must have entered from here, not knowing that this break of structure is just to establish that a new trend is about to begin. If you don't know how to restructure, go and watch my video on how to restructure like a pro. It's very simple and I explain everything. Now, this push to the upside, upon clearing this level, there is a market shift again for price to push to the upside to create a lower high. All right, after the creation of this lower high, this is where your entry should be. Then you now follow to break structure to the downside. We'll now say from here, break of structure. All right, we'll now say from here, break of structure. So a new trend is established. All right, so at this point now, what we are saying now is that price will pull back again, then break structure to the downside. Now, this is the other block from the higher time frame, and this is what is really strong enough, because anytime price get to this place, it must dish out a buy. All right. So at this point, if you scale down to 4 hours, you discover that from the higher time frame, look at it. It's all this whole area. Thank you so much, and God